Welcome back. Continuing our conversation on the markets with Somnath Mukherjee from ASK Private Wealth. Somnath, good morning. Thank you for joining in. This unconvincing move that you've seen from the lows, the uncertainties have still not ebbed. What do you do in a scenario like this? For a long-term investor, do you think this is possibly the right time to accumulate?
Good morning. There is no timing element to investing for investors. Traders, different ballgame altogether, but for investors, time in the market is rather more important than timing the market. And I think these are the episodes, these are the pivot moments which remind everybody how important time in the market is, rather than trying to time the market in terms of an entry, sometimes also in terms of an exit. So yeah, from a meta standpoint, is this the bottom? Is this the end? I think we should be humble enough to say we don't know. I don't think anybody does, and hence it's a bit of a fool's errand to start trying to time the market basis a whole bunch of variables where we're not even very sure on where the end game of this war is, which is the proximate reason for all the ruckus that we are seeing across asset markets today.
Mm. In a scenario like this, then, Somnath, what are those sectors that you are putting money to work, if you have put money to work at this time?
Right. So I think, barring the point about sticking to discipline and sticking to long-term investment processes, regardless of market cycles, things that look well right now, it's clear that inflation is something that is going to be front and center. Interest rates are going to be something that is front and center. High interest rates are something that's going to remain front and center for quite some time. It is important, therefore, to look at portfolios to see if there are representations that benefit from high inflation, from high interest rates in the portfolio. Hard assets look good. Metals, precious metals, especially gold, look interesting as well. These are anyway supposed to be very core strategic parts of portfolios. If they are not there, then time to start building up positions. If they are there, depending on how much there is, one should start either adding to them or at least looking at ways to beef up those exposures.
Mm. In that case, now we're heading to the cusp of another earnings season, Somnath, and considering the uncertainty surrounding us right now, what are the kind of earnings growth that you're penciling in for this quarter and for FY27 as well?
Yeah, so this quarter will have a limited impact because, remember, the war started only 3 weeks ago. So 2/3 of the quarter would have been over. So to that extent, this quarter in most cases should have a more limited impact than the next quarter. The question from really an earnings perspective is how much this war disrupts not just the prices of energy, which is the proximate sort of worry factor for everybody, but also how much disruption to supply chains have happened. For example, the Pars gas field shared by Iran and Qatar, the Qatari energy minister disclosed that 17% of Qatar's capacity has been taken off stream. It's anybody's guess how long it takes for that supply to come back on stream. And, that goes down to things like feedstock for fertilizer, for specialized chemicals like helium, and so on and so forth. One can keep going on and on. So a lot of the earnings going forward will be dependent on how badly the supply chains have been disrupted and how soon this conflict comes to an end so that the supply chain disruptions can start getting healed. I think earnings right now, what one needs to look at is more about the redundancies built in individual corporate supply chains and balance sheets to take care of the obvious disruptions that most corporates will be facing today.
All right, Somnath, thanks a lot for joining in. Short but effective conversation. The market continues to move higher right now. A lot of these platform companies are spiking Eternal is now at the high point of trade with a 3.5% gain. We're seeing Meesho come back into favor as well. Along with that, we have Urban Company, which has shown a noticeable spike in the last few minutes as well. Meesho is up nearly 6%. Urban Company is the one that should come up for you, up 3%. With that, we are out of time on this edition of Trading Hour.